to Mark Gibson Shumaris channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
Good afternoon, class, and welcome to your CPA review. Today we'll discuss consolidation, intercompany sale of merchandise. So last week, we've completed the discussion on consolidation subsequent to the date of acquisition. No? So sabi ko sa inyo, itong business combination, this is the star of advanced financial accounting and reporting. So we'll make sure that we'll cover this in detail. No? So at least we'll have 4 sessions. No? So next session, we'll do consolidation on intercompany sale of fixed assets naman. So today, we'll cover consolidation on intercompany sale of merchandise. No? So consolidation and intercompany sale of merchandise, we have downstream and upstream. No? So basically, class, parang hindi ka na lang agad, hindi mo na i-memorize to. No? So imagine you have the parent and the subsidiary. So if the parent sells to the subsidiary, so this is the parent and then here's the subsidiary. No? If the parent sells to the subsidiary, it's downstream. No? So pababa. So from parent down to the subsidiary. Now, if the subsidiary sells to the parent, so upstream naman. So yun lang, para at least sa dami kasi ng definition natin in accounting, mabawasan naman. No? So simply, if it's downstream, it's the parent is the selling affiliate. No? And all this will all be attributable to the parent. No? So when we go through the sample exercises later, we'll illustrate this downstream and upstream and how this is relevant, no, in terms of the calculation of the non-controlling interest and consolidated net income. No? Now, para siguro mas ma-illustrate pa natin, pag-usapan muna natin, di ba, sabi natin, parents and subsidiaries, they are separate entities, separate legal entities. So therefore, they keep separate books of accounts. No? So, for example, in the downstream, no, so sabi natin, pag downstream, si parent yung nagbenta. Class, sagit lang ha. I-on ko lang yung aircon ko. Ha? Sagit lang. Para diretso tayo. Ubo kasi ako pag naiinitan eh. Tapos naka-jacket. Sige, going back to downstream. So sabi na, pansinin niyo kalas ha, ang nilagay ko dito is selling affiliate. Because take note, we are discussing intercompany sales. Na? So it would be different if it's a sales to third parties. Na? So for example, si parent sells to Mark company. So it's a different transaction. So it has to be accounted for separately or accounted for in the separate books of the parent. No? Now today, we are discussing intercompany sale. So this is sales transaction between the parent and the subsidiary. And remember, no, when we discuss business combination, yung stock acquisition, no? So there's already a control. No? So imagine, si parent owns, sabi natin, 80% of the subsidiary. So there's controlling interest already. No? So 80%. No? It's kind of like selling a piece of your ownership, no? Of your own. No? So that's why in the consolidated financial statements, we have to eliminate. No? So we have to eliminate this intercompany sale. Kasi nga naman, no? So imagine, nagbenta ka sa sarili mo. And that's how we view it. No? Kasi nga, the subsidiary is already 80% owned by the parent. So it's as if selling something to yourself. So which is not acceptable. That's why we have to eliminate this when you prepare the consolidated financial statements. No? So kung napansin nyo rin class, step by step yung ginawa natin. No? So last week, we've concluded the discussion on the consolidation subsequent to the date of acquisition. So we've covered the amortization of excess, we've covered dividends. No? So right now, pinag-uusapan naman natin what if there is sales between the parent and the subsidiary or vice versa. So, like I said, no, we have to eliminate it. But having said that, paano naman yung recognition? So, imagine ito, no? So, on the separate books of the parent, pag nagbenta siya kay subsidiary, sabihin natin na ito yung regular entries natin. So debit accounts receivable for 10, sales 10. No? So again, this is basic accounting. And then of course, the parent has to record the cost of goods sold, no? And merchandise invent. Ito yung decrease. No? So debit 8, debit cost of goods sold 8, and then credit merchandise inventory 8. No? But come to think of it, itong binebenta ng parent also came from a supplier. No? So, hindi naman yan ginawa lang ni parent. No? So, binili niya yan from an outside supplier, kaya nagkaroon siya ng costing. Now, the subsidiary, pag ka-receive niya yan, just like, parang huwag mo isipin na nasa business consolidation tayo. Isipin mo basic accounting. Of course, when you purchase something, no, you have to, ito nga, sa purchase something on account, you have to recognize it at the billed price. So in this case, debit merchandise inventory for 10 and credit accounts payable for 10. Now, sabi ko kanina, in a downstream, diba, si parent nga yung nagbenta to subsidiary, yung binibenta ni parent also came from a supplier. So sabihin natin si X company. So A company, no, being the supplier of the X company being the parent, no. So pag nakabenta si A company, sa libro ni A company, the third party supplier, A company will debit accounts receivable for 8 and credit sales, no. So yan yung sa book ni A company. Now pagdating sa libro ni X company or ni parent, of course, it's debit merchandise for 8 and then credit accounts payable for 8. Kung napapansin mo, this is basic accounting. Saan lang nagkakaroon ng issue? Nagkakaroon ng issue, class, if at the end of the accounting cycle or calendar year, kung calendar year tayo or fiscal year, merong mga naiwan na inventory either sa side ni parent, kung upstream yan, or sa side subsidiary if it's downstream. Because we have to recognize unrealized profit on ending inventory. So later on, pag-usapan natin yan. No? Tandaan rin class, no? Parent and the subsidiary, they are, sabi natin kanina, they are separate legal entities. So they keep separate books, no? Of their own. No? So, si parent, meron siyang sariling libro. Si subsidiary, may sarili siyang libro. Now, when we prepare the consolidated financial statements, gaya ng pinag-usapan natin last week, we have to prepare working paper entries. Working paper entries are not found in either parents' books or subsidiary books. No? So this is done outside the respective separate books of the parent and the subsidiary. Kaya tinatawag natin siyang working paper entries. We also call this elimination entries. No? So we have to eliminate all the transactions between parent and subsidiary kasi nga, it's as if a transaction on your own. Parang ganda yan, no? Nagbayad ka ng dividend sa sarili mo. No? So that's why we have to eliminate that, no, to avoid double take-up. No? So that's what we've discussed previously. No? So when we covered the dividend, intercompany dividend. Siguro, actually that's the conceptual part, no, on the consolidation intercompany sale of merchandise. But to solidify the understanding or the concept more, let's go straight to discussion problems. Ito nga lang, medyo mahaba talaga yung problems on business combination. So we have to really focus. No? Okay, so let me read the requirements first. No? So discussion problem number one. Requirements are, we have four requirements. Number one, compute for the consolidated sales revenue for the year ended December 31, 2021. Number two, compute for the consolidated gross profit for the year ended December 2021. Number three, compute the non-controlling interest in net income. So take note, non-controlling interest for the year ended December 31, 2021, and the consolidated net income attributable to the parent's shareholder for the year ended December 31, 2021. So balikan ko pala class yung dito. No? Kasi di ba from the subsidiary, of course, matatapos yung flow kung may bibenta naman niya yan to a third party. No? So, halimbawa si B company purchases merchandise from the subsidiary. So, of course, the subsidiary will have to account for that. So, debit accounts receivable, credit sales, and then debit cost of goods sold, credit to merchandise inventory. So, para lang buo yung picture. Sabi natin, we have to recognize and realize profit on the ending inventory if may natira na inventory at the end of the accounting cycle in relation to the intercompany sales class. Don't be confused. Pinag-uusapan natin dito si intercompany sales. So don't mind the sales to third party or purchases to the third party. Ang pinag-usapan natin this afternoon is intercompany sale of merchandise. Okay? Sige, let me read the problem. On January 1, 2020, entity QRS acquired 60% of the outstanding shares of entity LMN at a gain from a bargain purchase of 320,000. For the year ended December 31, 2021, take note class, the acquisition date was January 1, 2020. Pagdating dito, ang binanggit na is December 31, 2020. So year 2 na ito agad. Entity QRS and entity LMN reported sales revenue of 16 million and 8 million in their respective separate statement of comprehensive income. Kaya kailangan dito presence of mind. Imagine, no? Ang minention sa first sentence is the acquisition. Pagdating ng second sentence, binibigay na yung result for year 2. No? So this is December 31, 2021. In the same year, entity QRS is the parent. No? I hope we have established that as early as we've completed reading yung first sentence pa lang. And entity LMN, the subsidiary, reported the cost of goods sold of 9.6 million and 5.6 million in their respective separate statement of comprehensive income. During 2020, there was a downstream sale of merchandise on account at selling price of 2,240,000 with the gross profit of 40% based on cost. Ito class. Pansinin, this is 2020. There was a downstream sale. So parang ganito pa lang, no? Sabi kasi natin, it's important to know kung downstream siya or upstream siya. Why? Kasi nga pag downstream, from parent down to the subsidiary, all the realized or unrealized profit there will be attributable to the parent only. Kaya importante na malaman natin na downstream or upstream. Ulitin ko, pag downstream kasi, all the realized or unrealized profit in the ending inventory will go to the parent only. Now, if it's if it's upstream, so meaning sales from the subsidiary up to the parent, then we have to allocate it, no, based on the proportionate share. Okay? So basahin ko ulit ha. During 2020, there was a downstream sale of merchandise on account at a selling price of 2,240,000 with the gross profit rate of 40% based on cost. So ito pa lang, imagine this is very tricky. 40% based on cost. So therefore, kung based on cost yan, your cost is 100%, your sales would be 140%. Again, this is basic accounting. On the other hand, there was an upstream sale of merchandise on account at selling price of 3,200,000 with a gross profit rate of 30% based on sales. No? So again, if this is 30% GPR of 30% based on sales, your sales would be 100%, cost of goods sold would be 70%. So that's the difference between the two. So that's the transactions during 2020. No? And then this one is 2021 na. Ha? That's in ha? On December 31, 2020, balik na naman ng 2020, 25% of the goods coming from the selling affiliate remained in the buying affiliate's inventory, but all were eventually sold to third persons during 2021. Kasi di ba, remember class, one of the assumptions, if the amortization of excess, di ba, during our discussion last week, relates to inventory. Kung bawa, the problem is silent, the assumption is all of the remaining inventory will be sold during the current period. No? So that's why, excuse me. So in here, it's not silent naman. So it's given, it's provided, information is provided. As of December 31, 2021, 40% of the goods coming from entity LMN were sold to third persons. So therefore, kung na-ibenta yung December 31, 2021, yung 40%, ano yung naiwan? Sa in-ending inventory niya. So, well, it's the 60%. Okay? For the year ended December 31, 2021, the acquirer reported net income of 4,480,000. So dito pa lang, nililito ka na, no? Kasi, di ba, parang ina-assume ng problem, alam mo kung sino si acquirer, alam mo kung sino si acquired company. Kasi nga, hindi niya minention dito. Pag doon, medyo at this stage, after having gone through different business combination problems, medyo confused ka pa rin sa acquiree at saka acquirer, baka you have to watch those discussions again. Kasi paakyat tayo, parang we started on the basics. And then right now, ito na yung advanced. So we have to be confident na at this stage, no, on the definition. So pag acquirer, ito yung nag-acquire, acquiree, this is the acquired company. So alam mo yan, inuulit-ulit ko yan, but definitely it will be very useful for all of you. So well, bulitin ko lang na. So for the year ended December 31, 2021, the acquirer reported net income of 4,480,000, while the acquired company reported net income of 1.6 million and distributed dividends of 400,000. Entity QRS accounted for its investment in entity LMN using cost method in its separate financial statements. Sige, isa-isay natin yung requirements. Consolidated sales revenue, GPR, gross profit, non-controlling interest in net income, and then consolidated net income attributable to the parent. So, pag-usapan natin yan. Let me just go to Excel file. So ito class ha, same approach. Gawin natin from exercise 1 will cover all the concept. No? Pakita ko sa inyo lahat ng entries in the working paper entries natin, yung elimination entries. No? Then pagdating sa discussion problem number 2, we'll go straight to the template. No? So again, we'll introduce templates here, pero syempre no, iba pa rin yung alam mo yung alam mo yung rationale behind the templates, no? But then syempre pagdating ng actual exam, even your quizzes, it will be good to have cheat sheets, no? Ayun nga tinatawag natin mga templates. No? So that's the intention naman, to help you solve long problems like this by way of just having templates. No? Parang puzzle na lang siya, plug ka lang ng plug. No? Okay. Sige. Problem number 1 is problem number 1 isa-isenate natin. So problem number 1, sabi natin, during 2020, meron tayong downstream sales. Again, pag downstream sales, this is sale from parent to the subsidiary. So, alisin ko lang ito. P to S. Okay? And then in 2021, okay. Unahin ko muna tong 2020. So sabi dyan na, during 2020, there was a downstream sale of merchandise on account at a selling price of 2,240,000 with a gross profit rate of 40% based on cost. So ito, I'm not sure kung kailangan ko pang ituro, pero just the same. So you have your sales, your cost of sales, your gross profit. So sabi natin dyan, this is readable for all. So sabi dyan, it's gross profit rate of 40% based on cost. So kung 40% yan based on cost, this will be 100% and this will be 140%. Now, kung gusto kong i-compute yung gross profit or the gross profit, so all I have to do is kunin ko yung intercompany sales, sabi dyan 2,240,000, multiply by 40 over 140. So meron akong 640,000. Kasi itong 640,000 sa libro ni parent, this is already realized profit. So tandaan ha, while we are doing consolidated financial statements, tandaan that the parent and the subsidiary also have to keep its separate books, no? So in the books of the parent, that 640,000 is already realized profit. Now, puntahan ngayon natin yung intercompany profit. Kasi nga this is downstream sales. Tandaan ha, benta from parent to subsidiary. So in this case, si QRS nagbenta papunta kay LMN. So 640,000, ito yung GPR, multiplied by 25%. So saan ngayon nakuha itong 25%? Pansinin, on December 31, 2020, 25% of the goods coming from the selling affiliate remained in the buying affiliate inventory, but all were eventually sold during the sold to third person during 2021. Ulitin ko yung concept kanina. So sabi ko, in intercompany sales, ang issue only arises when uh, inventory at the end of the accounting cycle remains in the books of either the parent or the uh, subsidiary. So in this case kasi, kaya kung dun yung issue, yun yung ginagawa natin ng accounting solution. No? So, so in 2020, sabi natin nagkaroon ng downstream sale. So kino-compute natin magkano ba yung unrealized profit, no, in terms of the ending inventory. Ending inventory, ito yung natira, no? So it's still the same concept, no, sa basic accounting nyo. So ending inventory, sasabi dito, represents 25%. No? So that 25% multiplied by the gross profit of 640,000. So sabi natin 640,000 multiplied by 25%. So that's 160,000. Ano ngayon itong 160,000? This is the unrealized profit ending inventory. Kung this is the unrealized profit ending inventory for 2020, of course, this will be your realized profit beginning inventory for 2021. Kasi pansinin, sinabi rin naman ng problem that on December 31, 2020, 25% remain, no? In the buying affiliates inventory, but all were eventually sold to third person during 2021. So therefore, this 160,000 will be your realized profit on the beginning inventory 2021. So take note of that. Pero later on, mas magiging clear pa yan. So okay na tayo dito sa downstream sales. Puntahan natin yung upstream sales. So sabi natin again, pag upstream sale is the sale from the subsidiary to the parent. No? So magkano naman yon? Basahin natin ha. On the other hand, there was an upstream sale of merchandise on account at selling price of 3,200,000. So ayan. Kung napansin nyo rin class, no? Naka-template din yung kung paano ako mag-solve. Again, this is just my way of solving problems like this. You can adapt this or you can have your own calculations naman. So ang maganda lang kasi sa ganito is mas madali ko siya nakikita. So we have intercompany sales of 3,200,000. Gross profit of 30%, so wala tayong problema dyan. So that's 960,000. Kaya palagi sinasabi, careful, no, in terms of the calculation of the gross profit. Kasi dito, this is based on cost. No? So nakakapalito. No? So kung ako ang didiscarte to sa exam, i-highlight ko na or bibilugan ko na itong 40% based on cost. No? Okay. Then, the intercompany profit again, no? So we're only calculating the intercompany profit kung may natirang inventory at the end of the accounting period. No? So meron nga ba? Tingnan natin. As of December 31, 2021, 40% of the goods coming from entity LMN were sold to third persons. No? So kung naibenta ang 40%, ilang percent yung natira? Well, it's 60%. So 960,000 multiplied by 60%, this is your unrealized profit ending inventory for 2021. So ito, no, dahil hanggang 2021 lang naman yung sinasolve natin, what if tinanong ka, how much would be your realized profit beginning inventory 2022? Well, the answer is 576,000. The problem is silent, pero sabi nga natin, the assumption is all the remaining inventory will be sold the following year. No? So in this case, in 2022. Okay? So, ito na, pero ito, from 2020 intercompany profit, ito na rin yung highlight ko dito kanina. So, realized profit, beginning inventory. So, that's 2020. Okay. So, what are the uh, uh, working paper entries? No? So, sabi natin, class, ha, the parent and the subsidiary, they prepare their own separate financial statements. No? Now, we are going to consolidate those financial statements para at least no, mas reliable, mas madaling maintindihan ng users. No? Kasi nga, technically, the parent owns, in this case, ilang percent ba? 60% of LMN. No? So, therefore, we have to eliminate all those entries related to the intercompany sales. No? So ano yung entry number 1 natin? So of course, number 1 is to eliminate the intercompany sale of merchandise during the year. O class, isa-isa natin. This is for 2020 muna. Ha? So 2020, syempre, di ba, nag-record si noong 2020 ang benta is from QRS papunta kay LMN. No? So, the books ni QRS, uh, kung nagbenta siya, ang entries niya would be debit AR, credit sales. No? So, we have to eliminate those entries. No? So, kaya napansin mo, ang entries muna natin dito is debit sales to eliminate the sales and credit cost of goods sold for 2,240,000. So, parang ano pa to, no? Basic accounting, no? So we eliminate this. So i-reverse lang natin. So to eliminate intercompany receivable and payable, of course, debit AP, credit AR. So AP, ito naman yung na-recognize sa books ni LMN. Now, to recognize the realized profit on the beginning inventory, buuin ko muna ito na para at least mas madaling realize profit beginning inventory RPBI. Sabi ko dyan, not applicable. Not applicable, bakit? Kasi, well, 2020 pa lang naman nag-start, di ba? So kung 2020 nag-start, wala pa tayong beginning inventory. Wala pa tayong inventory in relation to intercompany sales. So therefore, not applicable. Now, to eliminate the unrealized profit ending inventory, UPEI, during the year. So sabi natin, itong entry na to, this is to eliminate the 160,000. So ito, 2020 ha, o wag mo na magpapalito. 2020 yung pinag-usapan natin, we have to eliminate the unrealized profit ending inventory. Kasi remember, sa books ni parent, ni QRS, the whole gross profit is already realized. Kasi sa separate books niya, naibenta niya na yan, so lahat yan, i-consider niya na as his income, as the parent's income. No? But then, on the consolidated financial statement, sabi natin, we have to eliminate that kasi nga we don't have to recognize those profit, no, between the parent and the subsidiary. So kaya kailangan natin i-eliminate as well yung unrealized profit, no. So paano ngayon yan? Paano natin ngayon i-eliminate yung unrealized profit? So debit cost of goods sold for 160,000 and credit merchandise inventory of 160,000. Kung napapansin mo, dinidecrease natin yung merchandise inventory. We are also decreasing the impact to the gross profit. Pero kung napansin mo, ang debit was sa cost of goods sold. Pag-usapan natin to briefly, no? Kasi class, wala naman tayong account na gross profit. Kung may account tayong gross profit, doon na lang natin ipasok. No? But then there's no account in gross profit. So therefore, we have to affect it in the cost of goods sold, no? So increasing the cost of goods sold, anong effect nito? Bumababa yung gross profit natin. Okay? And ergo, the net income. Okay. So yun. So na-eliminate na natin lahat. Kailan lang ba nagiging realized tong portion na to, no? Itong intercompany sales, no? So when this is sold to third party. So gaya nung kanina, di ba ito? Sabi diyan, 40% of the goods come from entity LM and were sold to third persons. So that 40% is already realized, no? In terms of the consolidated financial statements. No? So ulitin ko yung class ha. The sales between the parent to the subsidiary, realized na yan as far as the own financial statement ni parent. But then, in the consolidated financial statements, we have to eliminate them up to the extent of those remaining in the ending inventory. No? So, kailangan natin i-eliminate yun. Okay? So, napag-usapan natin ngayon yung working paper entries for 2020. Pag-usapan ngayon natin yung 2021 naman. Yung sa 2021 working paper entries. So sabi natin, we have to eliminate again the intercompany sales of merchandise. Magkano ba yung intercompany sales? That's 3,200,000. O wag magpapalito class ha. Nandito na tayo ngayon sa 2021. So that's 3,200,000. Again, ito naman, this is basic accounting. No? So we eliminate the sales, the cost of goods sold, the AP and AR between the parent and the subsidiary. So okay tayo dito. Pag-usapan ngayon natin ito, to recognize the RPBI. No? So sabi natin RPBI, open ko na ito. RPBI is the realized profit beginning inventory. So meaning, ito yung unrealized mo last year, di ba sabi natin, kung if the problem is silent, those remaining inventory last year will be sold the current year. No? So with that, we have to recognize the realized profit beginning inventory. So paano yan? So debit retained earnings for 160,000 and credit cost of goods sold. No? So it's debiting the retained earnings kasi nga this is from last year. Okay? And then of course, cost of goods sold credit because well, we have to include this no in the cost of goods sold calculation. Okay? So this is the entry no, to recognize the realized profit. Now, of course, to eliminate again the unrealized profit ending inventory, that's 576,000. So ito naman yung class. So kung napapansin nyo class, yung mga working paper entries natin, it follows the same procedure. So simply, we are eliminating transaction between the parent and the subsidiary. So in this case, intercompany sales of merchandise. No? Nag-record excuse me, nag-record si parent sa libro niya, nag-record si subsidiary sa libro niya. Now, during the preparation of the consolidated financial statements, we have to prepare working paper entries to eliminate those respective entries. No? So lahat ng mga entries na ginawa ni parent, ginawa ni subsidiary, with respect to the intercompany sale of merchandise, we have to eliminate them. No? So kaya yun yung reason na to. Ito, this is basic accounting, this is basic accounting. Ito, probably, you have to analyze this, no? Pero kung napapansin mo, it's debiting retained earnings kasi nga this relates to prior period. And then of course, you have to affect you have to affect this in your cost of goods sold for this year. Okay. So, and in terms of the uh, elimination of the unrealized profit ending inventory, at naman, I hope no, this is clear. No? So, uh, remember, no, we can only include the profit once it's realized. No? So, paano siya naging realized once it's sold to third parties. No? So, in this case, we have to eliminate this kasi nga, this is unrealized profit. So, how to eliminate this? Uh, we have to deduct this from gross profit. How to deduct this from gross profit? Edi increase mo yung cost of goods sold. So by increasing your cost of goods sold, bumababa yung gross profit. So essentially, we are eliminating this unrealized profit. Okay, so kung clear na tayo dun sa mga working paper entries, puntahan ngayon natin yung requirements. So, okay. So requirements. No? So number one, compute the consolidated sales revenue. So ito na yung mga template natin class ha. Consolidated sales, it's sales of parents per books. So meaning own books, separate books. Sales of subsidiary per books, less intercompany sales during the year. Ang tandaan, ang pinapakompute sa atin dito is December 31, 2021. So consolidated sales, sales of parents. No? So, tignan natin how much. On December 31, 2021, entity QRS and entity LMN reported 16 million and 8 million respectively. So meron kang 16 million kay parent, 8 million ngayon kay subsidiary. No? Now, less the intercompany sales during the year. How much is the intercompany sales for 2021? Huwag magpapalito. This is 2021. Kunin natin yung 2021. So that's 3,200,000. Okay, so therefore, 2021 consolidated sales would be 20,800,000 per letter A. Okay. Next, consolidated gross profit. So sa consolidated gross profit pala. Sige, consolidated gross profit. So, syempre, hindi naman natin makakompute yung consolidated gross profit without looking into the consolidated cost of goods sold muna. So again, ito na yung template natin. So it's cost of goods sold of parent per books plus cost of goods sold of subsidiary per books less intercompany sales during the year less realized profit beginning inventory, add unrealized profit ending inventory. This is 2021. So yun yung medyo nakakalito kasi 2 years nung pinag-uusapan natin. Kaya very careful tayo dapat. So sabi, how much is the consolidated cost of goods sold? Magkano ba yung cost of goods sold ni parent muna? So sabi dyan, in the same year, entity QRS and entity LMN reported cost of goods sold for 9.6 and 5.6 respectively. So, kuha natin to ha. Less intercompany sales during the year. So, magkano yung intercompany sales natin? That's 3,200,000. Less realized profit beginning inventory. So, tandaan class ha, this is 2021. Ano yung realized profit natin beginning inventory? Ito yung ending na 160,000. So, we have to deduct. Add unrealized profit ending inventory for 576,000. Ito naman yung na-compute natin na ending inventory ng 2021. The unrealized profit. So therefore, meron tayong 12,416,000 na consolidated cost of goods sold. Now, ang requirement number 2 has something to do with the consolidated gross profit. No? Of course, we have to calculate it. No? So, Sales, 16 million less 9.6. So that's 6.4 million for the parent. Again, basic accounting pa rin. Subsidiary per books, that's 2.4 million. Paano nakuha? That's 8 million less 5.6 million. Naka 4 million naman siya. Mas mating sundan. Add realized profit beginning inventory. That's 160,000. Again, yun yung na-compute natin kanina. Less unrealized profit ending inventory, 576,000. So total consolidated gross profit would be 8,338,000 pesos or letter C. Okay. Itong number 3 and 4, compute the non-controlling interest in net income for the year and the consolidated net income attributable to parents. No? So kung napansin mo class, this is the same template that we have used. No? Ano lang yung nadagdag? This portion. So ito ito na yung diniscuss natin last time. Dinagdag lang natin to this time. No? So to account for the realized and unrealized profit. No? Sige, pag-usapan na ngayon natin ito. Okay. This is again 2021. Net income ni parent. So sabi dyan, 4,480,000. So for the year ended December 31, 2021, the acquirer reported net income of 4,480,000. So yun. Yung net income ni subsidiary, how much? 1,600,000. So sabi natin, yung net income ni subsidiary, we have to allocate this using the proportionate share. So that's 1,600,000 multiplied by 60% for the parent, and then 40% naman sa non-controlling interest. Excuse me. Amortization of excess, wala naman tayo ngayon. Impairment loss, wala rin nabanggit. No? But I mean, it's good, no? Kung sinusulat mo palagi yung template, kasi sabi nga, di ba, pag sinusulat mo, there's something na nare-retain na agad sa'yo. 20% of what you write down, it's being retained to your brain. Then intercompany dividends, that's 400,000. Again, we have to deduct this, no, in order to reduce the net income, kasi nga sabi natin dividend, this is dividend intercompany, so to avoid the double take up. So that's 240,000. So how to get that? 400,000 multiplied by 60%. Now, this is 2021. So sabi natin dyan, we have to add realized profit in ending inventory. Pero pag-usapan muna natin ito. Yung realized profit ng ending inventory, kung napansin mo, I only put this under the parent. Bakit? Pansinin natin, no? Yung realized profit beginning inventory, this is from 2020. Yung 2020, this is downstream sales. So sabi natin, if it's a downstream sales, it's a sales sales from the parent down to the subsidiary. And if it's a downstream sales, all the realized and unrealized profit will only be attributable to the parent. Bakit? Kasi hindi naman, I mean, it's a transaction of the parent. Walang share si subsidiary. No? If it's upstream, may share si parent palagi, no? In relation to the controlling interest, which is in this case 60%. So yun lang naman yung rationale ng class. So going back, no? So that's the reason why the 160,000 was only included under the parent. No? So that's 160,000. Siguro naman naalala niyo na kung paano na-compute yan. Yan yung realized profit ng 2020, ergo the realized profit beginning inventory for 2021. Okay. Now, for the unrealized profit ending inventory, pansinin, unrealized profit ending inventory, we have to allocate this between the two using the proportionate share. Why? Kasi the transaction is an upstream sales. So it's a sales from the subsidiary to the parent. No? And the parent owns 60% of the subsidiary in this case. No? So magkano nga yung unrealized profit? That's 576,000. 576,000 multiplied by 60%, that's 345,600. Now, for the non-controlling interest, that's 40%. Okay, so with that, pwede natin ma-compute how much would be the consolidated net income attributable to the parent. No? So it's 5,014,400, letter C. And then 409,600, letter D. So that's for requirements 3 and 4. So kung napansin nyo, class, this is the same concept, no, that we have discussed when we had the consolidation subsequent to date of acquisition. We are only building up. No? So ngayon, nadagdagan this portion, no, realized profit and unrealized profit. Ang medyo tricky lang is on the classification, no? So whether it's upstream or downstream. Pero I hope not this stage hindi ka na nalilito kung downstream or upstream. Remember, kung ang nagbenta si parent pababa kay subsidiary, it's downstream. If the subsidiary sells the parent, it's upstream. So yun lang, para at least mabawasan na yung mga minememorize nating terms. No? So another tricky then is if it's a downstream, all the revenue, all the realized and unrealized profit will only be attributable to the parent. Kasi nga, wala dapat share si subsidiary. Kasi si parent, benta ni parent yan, transaction ni parent. So problem number 2, let me read the requirements first. No? Number 1, consolidated cost of goods sold 2021. Number 2, consolidated net income in 2021. Number 3, non-controlling interest in the net income of TUV company in 2020. Ayan ha. And number 4, consolidated ending inventories in 2020. So again ha, tip lang ulit, no? When you solve problems like this, highlight mo na agad yung year, no? Kasi that's very tricky. No? Nakakalito yan, saka ang palagi kasi pag lumabas yung sagot, happy-happy ka, binlugan mo na agad, eh nagkamali ka ng tingin sa taon. No? So that's how important. No? Dapat ang sakit kasi doon ka lang magkakamali, no? Kung kulangan sa presence of mind. No? So let me read the problem. JKL Corporation owns 75% of the outstanding stocks of TUV company. When the book values are equal to fair values, thus no goodwill, no excess at the date of acquisition. So, si JKL Corporation is the parent. The acquirer owns 75% of the outstanding stocks of TUV company. TUV company is the subsidiary, the acquired company, or the acquiree. So, ayan na. Paulit-ulit na. Baka mabibigay ka na nga sa akin kasi paulit-ulit ako dyan. Selected information from the separate account of both entities for 2020 and 2021 follow. So, ito yung separate books ni JKL, 2020 and 2021. At the same time, TUB company for 2020 and 2021. So, sales, cost of goods sold, operating expenses, and then ending inventory. In 2020, TUV company sold merchandise to JKL company for 50,000 at a profit of 16,000. 30% of this merchandise remained at the account balance of JKL Corporation at the end of 2020. In the same year, JKL Corporation sold its own merchandise costing 50,000 to TUB Company at a gross profit of 20%. 15,000 at cost remained in the ending inventory of TUB Company at the end of 2020. Question, ito bang ending inventories na to? Are these purely intercompany inventories or a combination? So ito class ha, kasi nga separate books ni JKL and TUB. Sabi natin, they are accounting parang regardless kung intercompany o hindi, they're accounting for it separately in their own respective books, no? So therefore this ending inventories, no, combination yan. So yan talaga yung kung paano nire-record sa separate books, no? Now bullet number 1, sabi diyan, in 2020, TUB Company sold merchandise to JKL. So si TUB, subsidiary, nagbenta kay JKL, it's upstream. But also at the same time, JKL sold 50,000 to TUB. So merong upstream naman. Meron namang downstream. No? So in 2020, there's upstream and there's downstream. Punta natin yung bullet number 2. In 2021, TUB Company sold merchandise again to JKL for 60,000 at the profit of 19,200. 20,000 of this merchandise at billed price remained in the inventory balance of JKL Corporation at the end of 2021. At the same time, JKL Corporation sold merchandise for 85,000 to TUB Company at a gross profit of 15%. 15,000 pesos worth of merchandise at billed price remained in the ending inventory of TUB Company at the end of 2021. So ito class, unang tingin, parang ang daming data. Pero kailangan lang natin, di ba, na-establish na natin kanina, ano ba yung importance ng upstream and downstream. So sabi ulitin natin, no? If it's downstream, all the realized and unrealized profit will be attributable to the parent only kasi nga downstream is from the parent down to the subsidiary. Now, if it's upstream, we have to split it, no? Because it's a sales from the subsidiary to the parent. No? So in this case, parang ang ganda ng problem kasi we can illustrate upstream and downstream in 2 years, no? 2020 and 2021. Now, bullet number 3, there were no dividends declared or revenues recorded by JKL nor TUB during 2020 and 2021. Okay, so sabi natin, buti naman. No? So let's have problem number 2. So sabi natin kanina class na, we're going to approach problem number 2 using the template na lang. No? So let's skip all those entries. Anyway, napag-usapan na natin siya sa problem number 1. Okay. So diretso tayo dun sa hinihingi ng problem. Cost of goods sold. Consolidated cost of goods sold. Pero meron tayo ditong cost of goods sold parent, cost of goods sold ni subsidiary, meron tayong 540,000. Again, this is 2021. So kunin natin yung kay parent, that's 540,000. Ayan, that's given. Cost of goods sold of subsidiary per books. No? So sa subsidiary, that's 310,000. Remember, this is 2021. Less intercompany sales during the year. So ito na. Dahil may intercompany sales during the year, itong 3 portions na to, analyze muna natin yung mga intercompany transactions in 2021, in 2020 and 2021. 2020 is relevant for the 2021 calculation because of the realized profit beginning inventory. So, i-calculate natin lahat. No? Sige, unahin natin yung 2020. In 2020, meron tayong TUB company sold merchandise to JKL. Si JKL ulit, oops. Baba ko lang muna to. Si JKL ulit, siya si parent. No? So kung merong upstream, magkano muna yung intercompany sales? Sabi natin 50,000. 50,000 at a profit of 16%. 16,000. So this is the profit, no? 16,000. Now, intercompany profit of 16,000, magkano ba yung natira pa? Sabi dyan, 30% of the merchandise remained at the account balance of JKL Corporation at the end of 2020. So 16,000 multiplied by 30%, that's 4,800. Again, this is your unrealized profit ending inventory 2020. Lagay ko dyan. And also, this is your realized profit beginning inventory 2021. Okay? Also, in 2020, meron din tayong downstream sales. No? Okay. Paano naman yung sa downstream sales? No? So, si JKL nagbenta kay TUV. Magkano? 50,000. At the gross profit of 20%. No? So multiply by 20%, so that's 10,000 pesos. Now, 10,000, 15,000 at cost remain in the ending inventory. Magkano daw yung cost? No? So ano to, magpapalito, medyo tricky. 40,000 yung total cost. No? So paano na-compute yan? 20% kasi is the gross profit. No? So therefore, 80% is the cost of goods sold. No? So that's 50,000 multiplied by 80%, 40,000. Or simply, 50,000 less 10,000, that would be 40,000. Kasi ang sinasabi dito, ito na naman yung tricky part, 15,000 at cost na remained in the ending inventory. So how much inventory yung natira? Kung 15,000 at cost. No? So that's equivalent to 37.5%. So paano na-compute yung 37.5%? 15,000 daw natira based on cost. Cost natin is 40,000. So 15,000 divided by 40,000, that's 37.5%. Okay, so 10,000 multiplied by 37.5%, so that's 3,750,000. And remember, this 3,750,000 will be your unrealized profit ending inventory for 2020 and also your realized profit beginning inventory for 2021. Okay? So kung nakikita nyo class, no? Parang lang tayo nagpa-puzzle. No? We discussed the rationale of all those working paper entries. This time, we're just working on the template, no, on our cheat sheets, no, para at least mas mapabilis, no. Of course, kasi pagdating ng CPA board exam or pagdating ng quiz mo, wala namang parang you won't get any points, no, for those presentation. No? So parang ano lang yan, eh, no? If you parang kung naging habit mo na i-present yung working papers mo neatly, it will help you para at least pagdating ng CPA board exam, maayos yung mga solutions mo. Kasi could be na like in this case, no? So imagine 2021 yung pinapasolve. And then pagdating ng number 3, babalik ka ng 2020. What if kung saan ka na nagsulat ng 2020. So it's a waste of time. No? Uulitin mo na naman yung 2020 calculation mo. So kung halimbawa maayos yung pagsusulat mo, you can simply pick the numbers from those previous calculations. No? So yun palagi yung sinasabi ko. No? Kasi for sure, you will encounter problems like this. No? So syempre sa ka magsimula, number 1, hindi ka naman magsimula agad ng number 4. So hindi mo makita na yung number 4 pala, number 3 and number 4 will require you to compute for 2020. Paano kung saan-saan? Tayo pa naman ang hilig natin magsulat kung saan-saan lang. Diba? So we have a piece of paper, sulat doon, sulat dyan. So as early as now, try to make it a habit. No? So at least, hindi ko naman sinabi na gandahan mo palagi. No? So long as you can read your own handwriting, okay na ako dyan. Okay, sige. So punta natin ngayon yung 2021. So yung 2021, meron tayong upstream. So TUV company sold merchandise again to JKL. So meron tayong upstream, how much? 60,000 at a profit of 19,200. No? Ito naman, arte ko na lang to kasi kaya kung gusto mo kompletohin, pero binigay naman na yung gross profit, so okay ka na dyan. No? So aesthetics na lang yan. Medyo Ito medyo mainit kasi yung mata ko. Imagine mo kung naka-blank yan. So, kaya nilagay ko lang din. And then, complete with the calculation. So, next, intercompany profit. So, that 19,200. Paano kung na-compute yung 33%? So, sabi dyan, uh, 20,000 of this merchandise at billed price remained in the inventory. Magkano ba yung billed price natin? That's 60,000. So therefore, 20,000 over 60,000, so that's equivalent to 33.33%. 19,200 multiplied by 33.33%, that's 6,400 pesos. Ito, oops, not that one. Okay. Siguro ang tatandaan palagi dito is huwag magmadali, dahan-dahanin yung basa ng problem. Kasi imagine, no, yung isa kanina is based on cost, di ba? 15,000 at cost remained in the ending inventory. But this time, ang binigay sa atin based on the billed price, meaning based on the selling price. No? So very tricky. No? So very complex talaga itong problem. So let's have 2021 naman, downstream. So meron din downstream. So magkano naman? That's 85,000 to TUV company at a gross profit of 15%. So that's 12,750. Intercompany profit, 12,750 multiplied by 18%. Or 2,250. Pag-usapan nga muna natin to briefly. Paano na-compute yung 18%? So sabi dyan, 15,000 pesos worth of merchandise at billed price. So that's 15,000 over 85,000 or 17.6471 or 18%. 22,000. Okay. So again, this is your unrealized profit ending inventory 2021 and RPVI 2022. Okay. Balikan natin ngayon yung cost of goods sold. So sabi natin dyan, itong portion na to, sabi dyan, less realized intercompany sales during the year. This is 2021. So, paano na-compute yung 145,000? Simply, kunin lang natin yung intercompany sales ng 2021. So, that's 60,000 and 85,000. Imagine this, no? So, kung ikaw yung type ng person na kung saan-saan nga naman susulat, hahanapin mo si 60 and 85, no? So, at least kung naka-plot na yan ng ganyan, mas madali na maghanap, no? Less realized profit beginning inventory. So, take note last, this is realized profit beginning inventory. So this will be from 2020. So 8,550. So that's that's 4,800 and 3,750. Doon siya galing sa 2020. Now add unrealized profit ending inventory. So that's 8,650. Ito naman yung ending inventory ng unrealized profit on ending inventory ng 2021. So that's 6,400 plus 2,250. So nakita mo, that's 8,650. So the answer to requirement number 1 is 705,100 or letter D. So that's how powerful itong mga templates natin, no? Kasi just by using this, pwede natin ma-compute lahat yun. No? So para to do away with the complexity, we're introducing templates like this. Okay. So number 2, consolidated net income. So kung consolidated net income yan, isa-isayin lang natin. Again, this is 2021. Okay. So kung 2021 to, focus natin is yung mga data ng 2021. So that's paano na-compute yung net income ng parent. So si parent, 900,000 less 540 less 90. So that's 270,000. Ayun, parang sundan mo pa rin yung formula. Now si subsidiary, so that's 500 less 310 less 45. multiply by 75%. So that's 108,750 for the parent and 36,250 for the non-controlling interest. Walang amortization of excess, walang impairment loss, sabi sa third bullet, wala ring intercompany dividend. So okay tayo. Gain on acquisition, wala rin naman. Now, ito na. Kung kanina, nakalatag lang siya as one line item, naisip ko, bakit hindi natin buuin na yung template para at least mas madali na siyang maalala. So sabi ko dyan, add realized profit beginning inventory upstream, add realized profit beginning inventory downstream. Kasi sabi natin, pag downstream, it is only attributable to the parent. And since kasi di ba, meron tayong upstream and downstream for each year, no? So which could be normal, no? Kasi possible naman talaga na in a given year ay magbenta si parent at magbenta rin si subsidiary. So sige, ituloy natin yung calculation na to, no? So sabi diyan, add realized profit beginning inventory upstream. Again, this is 2021. So hanapin ko yung profit beginning inventory ng upstream for 2020. So meron ako ditong upstream 2020, 4,800. But remember, since this is upstream, we have to allocate this based on the proportionate share. So that's 4,800 multiplied by 75%. And then 4,800 multiplied by 1,200. Okay? Sabi natin, the realized profit beginning inventory for downstream, kaya importante class ha, kailangan ma-identify muna kung downstream or upstream. I hope, no, at this stage, eklarado na sa atin yan. Kasi kung hindi, may problema. Kasi magkakaroon ka ng difficulty, no, in solving the puzzle. Puzzle na lang tawag ko kasi kinukuha lang natin, no, from one calculation, then we're dropping it, we're flagging it here, no, in our template. Okay, so meron tayong ngayong punta na natin itong unrealized profit ending inventory. Again, this is upstream, no? Punta natin yung 2021 upstream, so that's 6,400. 6,400 multiplied by 75% or 4,800 for the parent and then 1,600 naman for the non-controlling interest. Ngayon, pagdating naman ulit sa downstream, that 2,250 will only be attributable to the parent. Huwag magpapalito kasi sa question number 2, the requirement is consolidated net income. So it has to be the total. So it's 414,900 or letter A. Okay, so that's requirement number 2. Puntahan ngayon natin yung requirement number 3. Pero tandaan, sa requirement number 3, ang hinahanap pala is 2020. Imagine that, no? Non-controlling interest ng 2020. So again, plot ulit natin, no? The same. Same template, no? Pero this time, 2020. Huwag magkapalito. This is 2020. So 800,000 less 480 less 80. So that's 240,000. Pagdating kay subsidiary, that's 400 less 248 less 40 para makuha yung net income multiply by the proportionate share. So that's 75% or 84,000 for the parent and then 28,000 for the non-controlling interest. This is year 2020, walang amortization of excess, walang impairment loss, walang intercompany dividends, walang gain on acquisition. So imagine, ang daming pwedeng itanong sa business combination. What if in one problem, pinagsama-sama to lahat? It's insane. Pero at least ready tayo with the template. No? So imagine, wala naman itong mga data na to, but I keep on flashing it in the screen para at least no, yung retention, ito talaga yung dapat na kasama whenever you compute for the consolidated net income. No? Para at least alam mo yun, you can remember it by heart na kailangan nandito siya. Okay. Add realized profit beginning inventory. Wala tayong beginning inventory. This is 2020. So, okay na rin siya. Ito ngayon. Less profit ending inventory upstream. So upstream 2020, so that's 4,800. Since this is upstream, we have to split between two, no? So proportionate share. So that's 3,600 for the parent, 1,200 for the non-controlling interest. And then finally, meron kang downstream 3,750 for the parent only. No? So that's 2020 downstream, ayun, 3,700. Yun nga, pwede ka na nag-stop doon, no? Kasi hindi naman yun yung hinahanap. Remember, ang requirement for number 3 is the non-controlling interest. So in this case, that's 26,800 or letter B. Okay. And then finally, ang tinatanong sa atin, number 4, consolidated ending inventories. No? So baba ko lang muna to. Para kita pa rin natin yung given. Sorry. Okay. So ito, consolidated ending inventory, another template, no? We have ending inventory, parent per books, 120,000. This is 2020. Saan ko nakuha yung 120,000? Ayun. Ending inventory subsidiary, 80,000. Less unrealized profit ending inventory for 2020. So that's 8,550. Actually, this is just the combination of the sum of the two. 8,550. So you have to deduct the unrealized profit. So that's 191,450 or letter B. Okay. So another cheat sheet, no? If I may say. Okay. So we have completed problem number 2. But actually, that ends our discussion on the consolidated consolidation, no, on intercompany sale of merchandise. No?
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!